Check 1, 2. What's going on, everyone? Surprise stream. We're chilling. Cozy as a bug in a rug. In our Adidas sweats. We're jamming to some drum and bass. Some liquid drum and bass. We're feeling liquid. We're sipping some hot tea. Welcome, everyone. Welcome to Dano Crypto. On this channel, we show you guys how to make simple, effective, and easy moves in the cryptocurrency ecosystems. But I wanted to talk about something, and let me know if the music is too loud, or if it's just right, or if you can even hear it in the background at all. But I was having some conversations with my wife and a lot recently about the nature of people's jobs and what they have been experiencing, how the job market's been looking, and how a lot of people who are really smart people, they have really good degrees, their background and their previous jobs that they had are, really, just solid resumes. But these people are having a hard time getting jobs. And it's kind of signaling that, the overall job market probably isn't as good as it seems in certain sectors, and where there's a lot of people who have these specific skills, but they're just not in high demand. So really, companies are, pulling back. And what does this have to do with the overall economy and how the job market is going to look in the next, the next 5-10 years going into this period, this 2030 area? Because you got to think about the nature of the Trump's administration. His term is going to be ending at this kind of pinnacle point where nice, awesome. GPM ticker Bitcoin. Let's go. I subscribe just so I can write this message. Yes, you should. But basically that, the nature of people having to figure out a different skill and figure out what type of jobs are actually going to be available in the future. And how does this all tie in with crypto? How does this all tie in with AI and robotics and a whole sector of jobs being completely replaced by robotics and AI? Some of them we would probably be really happy about, because some of these jobs, let's just be honest, with human labor, they kind of suck. Some of these jobs are really not jobs that we necessarily want to do as humans, but it's just the nature of how we've had this type of labor economy where there's certain, labor jobs that historically have been done because it's just what we do. And so I think when it comes to true robotics actually taking over and being able to do some of these jobs, like a lot of them being factory jobs, a lot of it, anything that can be automated by a robot will eventually be automated by a robot, because we're seeing it happen right now. But maybe not at the crazy scale that I'm talking about, where like thousands and thousands, like more, not even that, millions of people losing jobs. And then we have a type of social unrest that happens with this type of mass unemployment. And so what will end up coming down the pipe possibly is a type of universal basic income for a specific type of group of people who are incapable of getting a job. So I know it sounds crazy, but I start to think about it a lot, and I'm like, it already kind of is like that, where there's a group of people, section of people, where whatever reason, they are not equipping themselves with the necessary skills, I guess you could say, and the knowledge to be able to be in the forefront of how we can survive and make money in this digital age. For me, I'm realizing that I am the asset. I am the asset that can generate income through the knowledge and the skills that I'm learning, whether it be with crypto, audio visual stuff, music, social media, technology, all that stuff. I realize that I am the actual asset in generating income for those skills. It's not the companies themselves. It's not that, and so I think what a lot of people have to understand going into this age of AI is that they are going to need to figure out how to solve problems for people. They're going to need to figure out how to solve there's always going to be problems to solve, and someone needs someone, maybe you, to do something, and then that's how you can figure out how to survive if you are one of those people that are potentially going to be losing your job over robots and AI. And then another skill and information that we can learn is how investing. What is now the area in the sector of investing that is basically the talk of the town of big money and capital? Well, it's the blockchain. And just for example, we have all of these now bullish people in our administration in the United States, like the SEC chairman, Paul Atkins, bullish crypto, has this whole speech about Project Crypto. The White House releasing a full report on how America is going to be the leader in the digital asset financial sector. So with one thing you can do to strengthen yourself right now, if you're feeling lost, if you're feeling like what can I learn about that can give you an edge in the next 5 to 10 years to get you a good jump start on this is where you need to be. You need to be focusing on investing, learning about crypto, setting up digital wallets. And look, this is the first thing that they talk about on the first pages of this report from the White House is the difference between having a software wallet, which is MetaMask or a Brave wallet or any type of embedded wallet that is inside your phone or on your browser. And then you have the hardware wallets, which is your treasures, your ledgers, and something that's actually physical that your keys are also stored on. But both of these, you have the access to the private keys. And this is just the basic 101 of crypto. And then they talk about how Ethereum and Solana are smart contract blockchain platforms that can execute different programs and then go and then they go into the stable coins, which is a whole other topic of discussion and importance of learning, because once you learn about the stable coins and how these big companies are generating yield through stable coins with these protocols and decentralized application protocols, like one of them on the biggest one being Aave on Ethereum, has the biggest TVL in all of besides against with Lido DAO, has the biggest TVL in terms of value locked and also generating revenue. So this is something that you can start to keep your eye on and go, there's all this liquidity, all this money flowing around in the digital blockchain landscape. And if you know that money and big money ends up and flows to the next best appreciating asset, because that's how smart money moves. Like smart money, if you realize over time, moves in the direction of the next best appreciating asset. And especially when it's smart money, it wants to be there early and get in and have the data to back it up and all that stuff. And so this is what was happening with Bitcoin. It was already happening with gold. The data was showing that the dollar was losing strength, so it was good to be in hard assets that can appreciate in a way that is not like the dollar, because the dollar was inflating. We're printing more of it. The fiat currency in theory is meant to go to zero and be debased to a point where there has to be something else that it goes into. And so what is happening now is we're having all of this stable coin minting, but also we're having this big money go into blockchain, going into Bitcoin. Bitcoin's proven that it has been a pretty damn good store of value, and the companies are showing that they're still ponying up, and we're going to have some videos that we're going to play of some people that are building up the biggest treasuries for Ethereum and also with Bitcoin as well, in competition basically with how much they can accumulate Ethereum and how much they can accumulate Bitcoin. So it's pretty fascinating. It's pretty fascinating. And all of this is tying into how AI and blockchain and the nature of your job is all at stake. And so what are you going to do about it? What are you going to do about it, my friends? What will you do? I don't know. Well, I'm giving you some hints of what you can possibly do. Just start learning all of this stuff. Please start learning all of this stuff. All right, I did this test stream to see how many people would actually show up, because I haven't streamed at night in a while, and it is just like a middle of the week Wednesday, and I was very curious to see how many people would actually show up. But make sure if you are here right now that you're hitting the like button, because that's actually going to get more people to show up, and also it'll kick in the algorithm. We got to kick in that algorithm. We got some fun emojis that we can post up in the chat. All right, so let's actually, real quick, we're gonna pause that, and then we're gonna play this video of the actual Minneapolis Fed president, this Neil Kashkari, mentions the yeah, just the Sprotos. Just the Sprotos are here. Let's go. I'll take it. But if you're a Sproto in here right now and you haven't hit the like button and actually like spammed the chat with nonsense, then you're not a true Sproto, because the Telegram would say otherwise. All right, so let's watch this real quick.
But if it turns out that tariffs are having a bigger effect on
president, of course, of the Minneapolis Fed, and there is so much to talk to you about. I don't even know where you want to start. But maybe we'd start with what's actually just happening even inside the Fed, because there's a new opening, and then there's all the talks about the Kevins and what that means. And I'm curious as to somebody who's on that board, what it feels like.
It's uncertain. I mean, there's a lot. The Fed's in the news for a lot of reasons outside of just economics, and so that can be a distraction. And so it's just a reminder: keep focusing on the data, keep focusing on our jobs, and that's what we have to do, and that's what we are doing.
Okay, so rate path, of course, is the ultimate question that you guys have to solve.
Yep.
The president calls Powell too late constantly. The numbers, by the way, now that they continue to get revised downward, I think there's a group of people who increasingly look at those numbers and say, maybe he is too late. What do you think?
Well, there's two categories of data that I'm focused on. There's a bunch of data that I know and that I've got confidence in, and there's data that I don't know and we're not going to know for a while. The data that I think we know is that the economy is slowing. Housing services inflation is gently declining. Non-housing services inflation is coming down. Wage growth is coming down. We've seen the jobs number, and consumer spending is cooling. All of that suggests the real underlying economy is slowing. I've got confidence that that is happening. The part that I don't have confidence yet is what are the ultimate effects of tariffs going to be on inflation? And what I'm realizing is we may not know the answer to that for quarters or a year or more. And that tells me, as one policymaker, I need to start leaning more on the data that I've got confidence in. The economy is slowing. And that means in the near term, it may become appropriate to start adjusting the federal funds rate.
If that's true, do you think you were wrong to hold off thus far?
No, I don't think so at all. I mean, I think the economy has held up remarkably well. I think these tariff shocks are unlike anything that we've seen in 100 years, virtually. And it's taken a while for businesses to try to process it, for policymakers to try to process it. And there's just been delays. And if you look at the average.
But if you think about it, though, they hiked up the rates like really fast, though. Like, it was kind of like a shock to a lot of people. And it's almost like you felt it, even though, like, maybe, you know, this is the thing. Like, these dudes don't understand the direct negative consequences that keeping everything so tight and tightening everything and increasing the prices of everything. It caused a shock wave for a lot of people, and to go into debt almost kind of rapidly and just get sideswiped. So it's just like this data that they always, it's like, I feel like that they're whatever data they're going by is I don't know where this data is coming from, that or why they can't get the data correct from just the amount of debt that people have to take on. Do they even take that into account for their figures of how the economy's doing? Like, that should be the direct metric of if the economy's doing well or not, is like, how much debt are people in and how much are they having to use debt to either basically survive, you know, like what's the credit, what's the, you know, the average credit or debt of the American citizen, and it's probably not looking too good.
Effective tariff that's being paid at the border, it's around 10%. It's been climbing now month after month. It's well short of the 16% headline rate. And so should we react as policymakers to the headlines, or should we react to what's actually affecting the economy? And that's what's making these judgments difficult.
We've been talking all morning about something interesting, which is, why do you think companies have not taken up price in the way they did during the pandemic? Meaning, during the pandemic, companies took up price almost in advance of inflation that they thought was coming. With the tariffs this time, that has not been the case.
Well, I think it's a few different reasons. One is, once there's a pandemic that everybody can see, and it's nobody's fault, it's just a terrible thing that's happening to all of us, it's easy to say, hey, it's not my fault. I think tariffs are more complicated. Are your competitors going to do it or not? You know, I was in Montana recently, a small business, she runs a small restaurant company. I said, how did you protect yourself against tariffs? She said in late January, she bought a year's worth of bamboo shoots from abroad and stored them to protect her and her customers from tariffs. It's remarkable that that happened at such a little company and at big companies. So that's also why we have not yet seen the full effects yet. People are working down these inventories.
And so when you say you're not going to know it, you 12 months, what do you think happens between now and the next 12 months?
Well, I think right now the economy is slowing, and I think that we're going to have to respond to that. As the inflation data starts to come up, we're seeing it now in core goods, but how high is that going to get? Is it going to spill over into other categories? And is it going to be persistent? We're not going to know the answer to that for a long time.
The other piece of this is whether you think that tariffs are persistent, meaning whether you think they go up, they go down, they disappear. I mean, I think part of what the market is doing right now is, to some degree, discounting that the tariffs, at least as we know them today, stay that way.
Well, I'm assuming.
This is what I'm getting from all of this tariff talk. Wasn't there always deals and tariffs happening, and we just never talked about them openly like this? Like, when did ever we were talking about tariffs? Think about it. But they've always been a thing. And there's always been either, probably, I think, what would you call a reciprocal tariffs, and in different trade negotiations and deals and percentages or whatever that were already in place. But then Trump just made it more aware and made it more of that, and magnified the fact that there were certain countries that had us paying a certain amount, or things that was just, you know, ridiculous. So think about it, like how much the uncertainty of tariffs. It's like, I think it's just an excuse for them to continue to do their tightening.
The tariffs will be persistent. Whether the tariff effects on inflation are persistent is the question that central bankers care a lot about. And that we're not going to know for a long time. And does it bleed over into inflation expectations? So the path that I think about, I put down 2 rate cuts in my December summary of economic projections.
So this guy is projecting. He's like, hey, we're going to get 2 rate cuts, two rate cuts towards the end of the year. And so this is what's interesting. 2 rate cuts, but there's 3 meetings. 2 rate cuts, 3 meetings. So when and where are they going to do it? Because you got the here's the September one. We got one on September 17th. We got a 93% chance now that they're going to cut 25 basis points on the next meeting. So this August right here could be basically kind of front running the fact that like we'll get a signal of easing for the year, but two rate cuts. But then you go into October, there is a 64% chance that they do another 25, and then there is actually in December that there's a 52% chance that it continues to get, so that's it being 3. So according to the percentages here, it looks like we could potentially get 3 cuts. And they just do it by 25 basis points each FOMC, getting into January. And then this is where I think things are going to get really interesting. Because technically, until the Fed goes into a true QE and then at the what people are calling like the business cycle coming back on, which is just basically short form, pop the start backing up the truck, and it's just like risk on. The fiat's got to go somewhere that it can earn yield and percentage and get massive gains, and so that it's got to go somewhere, and so it's going to go into the stock market, and in Bitcoin, and in treasuries, and all that stuff. And this is where we get into this clip from Tom Lee again, kind of explaining the bullish case of the same target for the S&P. This is the same target. You go back on the live streams, weeks ago, where I was talking about how the S&Ps would be breaking up into all-time highs like this, and it's the same call. And then it's interesting that he's saying that Ethereum is having its Bitcoin 2017 moment again. So I've been also comparing that Ethereum is going through the same evolution and trust adoption from institutions like Bitcoin has been going through for its evolution, and it's growing and maturing as becoming one of the best performing hot assets in the world. And so let's see what Tom Lee has to say. And make sure you guys are hitting the like button. If you're coming in and you're just tuning in, you gotta destroy the like button. Let's go.
Welcome back to the exchange. Bitcoin higher by about 1%, while Ethereum is up more than 2%. That could be a good sign for stocks. That's according to my next guest, who says Bitcoin is now a leading indicator. Joining me now is Tom Lee, head of research at Fundstrat and a CNBC contributor. It's so good to have you here on set. Welcome.
Yeah, great to see you, Morgan.
Let's start right there. Bitcoin as a leading indicator. What's it indicating now?
Well, Bitcoin has been 1 month ahead of the S&P at every step this year. In January, it peaked before the S&P. It bottomed before the S&P in April. It made a new high in May, a month ahead of the S&P. And in early July, on July 9th, Bitcoin had a breakaway upside move, gaining more than 10%. That means that in this month, I think the S&P is going to have a breakaway move to the upside, towards 6,600.
Interesting, which sort of takes us to where you think the S&P is going to be priced for the year.
Well, I think that at least 6,600 is a minimum, because if we're making 6,600 in the next few weeks, then I think that probably 7,000 is a level we could touch by the end of the year.
Really?
Yeah.
What propels us to that?
Well, I think that three things are happening. One is the economy has survived tariff Armageddon, and it's probably strengthening because we know the ISM's been stuck below 30 or 50 for 30 months now. So finally, ISM could go above 50. The second is that we're getting closer to the Fed making a dovish pivot. I mean, they've been on hold for a long time, similar to how Kelly's birth is on pause, you know. But that, I think, leads to a re-rate of multiples. And the third is that I think sentiment's still quite bearish. You know, I think there's many of our clients that think we're going to have a recession because of the tariffs that started on August 1st. But I think businesses are ready to actually get through that. And that sentiment collapsing actually helps PEs.
Okay. Let's talk about Ethereum, because I know you're very bullish on that as well. We'll get into Bitmine in a second, too. But Ethereum specifically, why is this something you need to hold in your portfolio? Well,
to me, Ethereum's having its Bitcoin 2017 moment again. And to give perspective, in 2017, Bitcoin was under 1,000. But that was the year when Wall Street discovered that the narrative of Bitcoin is digital gold. And Bitcoin has gone to 120,000 now. So 120 times increase. In 2025, a couple things are happening around Ethereum. The first is the Genius Act is now making stable coins kind of green lighted, which is the ChatGPT moment for crypto, but it needs a smart contract, so it doesn't work on Bitcoin. The second is the SEC is pushing forward with Project Crypto, which is actually asking Wall Street to move the entire financial system onto the blockchain. Ethereum is the preferred choice for Wall Street because it's had zero downtime since inception, matching what the banks want, 100% uptime. It's also the most legally compliant and secure blockchain because it's recognized in the US and it's the second largest blockchain. And the third is almost all of it is taking place on Ethereum. JP Morgan's building their stablecoin on Ethereum. Robinhood is tokenizing on Ethereum. You know, the custody banks are doing it on Ethereum. So it's really where Wall Street meets, but that's also where AI is meeting crypto. Because as you know, as we tokenize and move towards robots, you need a token economy to control them, which is taking place on Ethereum. And which is why you're now the chair of Bitmine, which is looking to build out this treasury of Ethereum, not so differently than we've seen Michael Saylor do with Bitcoin at Strategy. Yes, that's right. So I think that MicroStrategy has written the playbook for what a Bitcoin treasury is, and now he's so big he has a sovereign put, right? He has 600,000 Bitcoin. Any nation that wants to get 1 million Bitcoin probably thinks it's cheaper to buy MicroStrategy. The Ethereum treasury model, which is we're trying to be the...
And this is the bullish case for buying companies that are ICOing or IPOing or anything like that. Like, for instance, there's one IPO that's happening right now on Robinhood for a company called Bullish. And they are a Bitcoin, I think a Bitcoin treasury or some type of crypto blockchain focused company that is currently having an IPO. But you have to think about it in terms of like the whole thesis of a lot of the stock market, especially anything that's connected with what Bitmine is doing right here, becoming the largest ETH treasury in the world. This is how our bags get pumped. Is by big money coming in like this. And we have to be doing the same thing. It's that simple, because this is how we're going to be able to compound over the next. Do you think these people, and this is the thing, this is my case of why I don't understand how people can be so bearish or be so negative or be chasing, gambling and trenching and trying to catch the next runner while they could just, it's the get rich quick kind of mentality. And we know this to be not healthy and not sustainable. And usually it can turn into a crash and burn. So the main question here, and with the theme of this live stream, and kind of we can tie it all back to like how you can survive in the age of AI, which is basically going to be the dominant force of how things are going to be controlled, is by AI systems, agents, and robotics and autonomous ecosystems of infrastructure that will eliminate a lot of jobs. So there's going to be sectors that are going to go away, and there's going to be sectors that are going to open up. What are these companies realizing now is that a lot of stuff is being tokenized to being on-chain, and services through financial services are on-chain. And then POS systems are now being implemented to take on cryptocurrency payments, whether it be stable coins through PayPal, activating their POS systems. We got Square, Jack Dorsey's company, activating POS systems to start taking Bitcoin and Lightning transactions. And we got fast food chains like Steak and Shake taking Bitcoin on the Lightning network now across all restaurants. So, and you're bearish? Like, come on, you got to be more bullish. And so you have to think about the next 10 years down the line, what's going to be used and what will be the dominant chains and the things to be invested in. Now, you can go down the blue chip route where we're just going now, what we're talking about with the ETH, Bitcoin, and certain other blockchains that are being set up with treasuries are getting a lot of institutional adoption and use case. Solana's getting a lot of use case. Tron's getting a lot of use case and IPOing and acquisitioning companies that are on the stock market through the Tron DAO. So then that leads you down this whole rabbit hole of altcoins and different things that you could be paying attention to, and these stocks that are setting up the treasuries to then be setting up yourself to freaking retire early. This is how you're going to survive through the AI. It's not by, let me find a new skill or a new, completely new career path. You just need to learn. I don't care what you make your money. You need to figure out how to invest, figure out how to build up a long-term strategy of where you think the best appreciating assets are going to be. And with the big money and the smart money, that is how you can figure out where that's going. And then you can use 10% or 15% to gamble on altcoins and the meme coins and whatever else is around, because you're naturally just going to want to do that. But really, where we're going to be building the long-term wealth is understanding that BitMine and Tom Lee and Michael Saylor and, Joe Lubin and all the bullish people, all the people telling you that they're buying, millions of dollars. They're not just doing it to quote, for this whole misconception that these people are going on TV telling you that they're buying millions just so you could be the person to buy from them, so then they can dump on your head. I really don't think it's not. I don't think it's the case like that. That is, I think, a misconception. These people are just going to where the next best thing is. And it's not fiat cash sitting in a savings account. It's investing in it. It has been. Because that is how true wealth is made. It's not. It's by compounding gains from stocks and magic internet money. And that's how we're going to be able to survive the AI age. That's how we're going to be able to do it. It's through those modalities. If you're still with me, share this live stream to anyone that has given you any sign that they haven't even begun to think about this. And you need to send them this live stream. Bitcoin is looking good on the weekly. I think, we're looking pretty bullish. We're holding strong. I think we're ready for the next leg up. I think we had the, like we said, we had the cool off. If you can see it right now on the weekly, it just had a little bit of a cool off. We had 1, 2, 3 weeks of full green, and then we went into some consolidation. And you can see it even in just a nice little pattern here. And even coming off that big descending wedge, we went up really nice, consolidated, went up really nice, consolidated, and you kind of can just see it as a nice little pattern, nice little oscillating wave here. And it brings us up to that next Fibonacci. The Fibonacci extension level was 1 128,000, I think, is the next level to shoot up. Because you can just kind of see with the momentum here that's kind of what's been happening with Bitcoin. And you can also see, if you want to see where money is flowing and kind of how the dominance of Bitcoin and the dominance of ETH, you just need to look at it. Go look at the ETH dominance and see where we're at, and see the correlation between the two. And you can see that we're heading up to the 618. And a lot of the times, you get a resistance at the 618. And then you get a nice recovery going back to the 382. The 382 could also act as support, as you can see here, whenever we broke above it, and then we went back down, acted as support. Now you can see that ETH dominance looks like it is headed towards that 13% range. Now we want to remind you guys that, remember where altcoins were in like certain meme coins, and let's just say like the altcoins in general, like altcoins season or altcoin month or whatever you want to call it. I like to call it pre-altcoin seasons. I call it the sniffings of pre-altcoin season, when the dominance of ETH and also the ETH BTC ratio started to look pretty good, because during these times, I think the ETH BTC ratio was up in a range where it was looking healthy. It was looking like, okay, altcoins, let's go. And what's funny is that that's the same level where we have the 786 and also where we have the 618 of a level where we think the ETH BTC ratio is headed, which signals strength in altcoins. Because if Ethereum is getting that sentiment, it kind of rotates and gives speculation into, okay, people start to bet on now Algorand. They start to bet on ENA or Athena. They start to bet on Near Protocol, Solana, XRP, AVAX. You start go there. That's how the money is just going to start flowing into these chains, and some are going to do better than others. More money is going to flow into different chains. The reason why Solana, I think, is getting so much attention is because of the nature of how it's shipping products and dApps. The nature of the on like basically just like crazy frequency of trading that can happen on Solana, and then there's the phone. There's a lot of stuff to be bullish on when it comes to Solana. And we gave the example of how Solana, before XRP and a lot of these big chains, has a CME, futures trading chart like ETH and Bitcoin. So it's the only three cryptos that have a CME futures trading, and Solana being the first to be on the list along with Bitcoin and Ethereum on the far side investors ETF flows. So now we can start to keep track of how much institutions are starting to flow into the Solana ETF. And so this is how you can see, and you can kind of think, okay, this is maybe where we can start thinking about accumulating altcoins, and it's not even near the time to sell. It's not even close to the time to sell. I think truly Q1 and Q2 of next year is going to be when things are going to be really kicking and rocking. Not to say that we're going to get a major pump and we're going to go into possibly, I have my time frame of where I think we're going to get 150K Bitcoin, and that's going to be I feel like that's going to be in October. I mean, I could be wrong, but my best case, my best guess is that we actually will get 150K Bitcoin. And the way that I am getting this is by looking at the Fibonacci extensions and the nature of the cup and handle breakout and where the potential of this thing can go on the Fibonacci breakout, and it all lines up for it to be in the range of 150,000. Right pinched up in that area. 150. Now, why am I saying 150? Well, because of the nature of the cup and handle breakout that I've seen happen with like perfectly with gold. When I started to chart gold and look at how gold was happening, and I've seen cup and handle breakouts happen like this, but on a smaller time frame. This is yeah, headband. It said trench lord vibes. That's funny. All right, so why do I say October? Okay, I have reasons for this. Now, in previous cycles, according to the data in the charts, Bitcoin specifically, not the market as a whole, just Bitcoin's peak price after the halving, because the halving is an important date. It does signify the halving of minor rewards, which is the whole basis of the blockchain for Bitcoin being proof of work. The miners that are validating all of the transactions and solving the math problems, they are now every 4 years continue to just get half the rewards, increasing the demand and also decreasing the supply. And after the halving, Bitcoin peaks at 520 days, 530 days after the halving. It's kind of like its peak price. Right at this point, we remember that the halving happened last year in April 20 on the April 22nd, 23rd or something like that. So if you go from here and go all the way into October, like the first week of October basically, that's 532 days. Now, currently from that point of the halving, we have gone up to the current price 76%. Now, normally, after a halving in the cycle, we get a little bit more of some cooking room, and this is where I think it's safe to say that going into October, before even the end of the year, we can get to $150,000 for Bitcoin, which would maybe even, the dominance maybe will go up even a little bit. I think, who knows? I don't know what really is going to happen once we see that type of number. When we see 150K Bitcoin, because we're going to see this 128 here pretty soon, and then it's just going to be off to the races. We're going to hit that fib, and potentially we could just we could break out. I mean, I really don't see why we wouldn't see this escape velocity with just the entire crypto market. Like the whole market is just due for explosion. And here's another cup and handle pattern that, like, you know, it's basically gold. Like, crypto is our gold. Crypto is like buying gold back before the financial crash of 2008. That's like what it is. This is our gold. Like, crypto, we should be thinking about crypto as our gold mine of being so early. But I don't want to be like, oh, like this is just our little club, you know, like it's just for the rich people, and then all the headbands at the trench lords. No, like I think retail, once they wake up and start buying these assets, and almost kind of like what a quote like Wall Street. See, the thing is like these people don't understand that, like, they tried to do the Wall Street bets thing and it didn't work. It showed that the system was freaking rigged. But if you think about the open community nature and the open charts of some of these meme coins and just like some of these decentralized blockchains, why isn't retail realizing that they could basically do the equivalent of the Wall Street run and bid crypto in general as a whole? That's kind of what the Dogecoin movement was essentially birthed in and was all about, is to rally and build behind something, and also the Shiba Inu community as well. It's really interesting. So you look at gold. And if you were buying gold in the early 2000s, let's see. If you're buying gold in 2005, you're up 610%. Just DCA in gold. But see, the thing is that now the smart money, they know it's not gold. Maybe it could be silver for a little bit, but I've already got the scoop on silver that silver would never truly like break out and go like and do what gold does, because silver is used for a lot more things in manufacturing and in terms of like a metal that they can't like overinflate the price, because it would make a lot of things a lot more expensive. So they kind of have to keep it down. And I was like, gotcha. Okay, cool. AKA buy crypto. Or also, now we're going to get into the nature of the stable coins. So you're thinking, okay, well, how can I earn money with stable coins if they're stable? It's a stable coin. Well, I'm going to give you two examples. You have Pulse Chain is probably the quickest way that you can start earning and farming yield and certain tokens by using stable coins that you can bridge over and also just like buy on Pulse Chain. And you can do it by using PLSX. And so by doing that, you got to get the necessary tokens, and this is how I'll explain it. So how you can actually generate yield, and you can see what yield is more attractive to you, because certain pairs of tokens are going to give you certain weighted percentages of yield. The biggest one right now that is earning a good weighted yield of 42%, and with high liquidity being at 4.6 million, and the APR actually being pretty decent. Yeah, this one's probably the best one right here, is the DAI, which is the stable coin. DAI from Ethereum paired with Pulse Chain. So with PLS. So what you can do is, using this DAI stablecoin paired with PLS, you get the SPL tokens as a representative can't even talk. representation of the two tokens. And then whenever these pairs are traded, you're going to earn the incentive token. And then the incentive token, if you look here, has the chart. You can see kind of how this thing is appreciated or also gone down over time. But the incentive token is basically the token and yield for Pulse Chain in the pools, in these farms. So I've already tested out this particular one, which is incentive PLS. And then I tested also this one where I was using the incentive token itself as well, because then you can double stack where you have incentive tokens, and then you can restake those along with PLSX, which is the DEX token. So there's all kinds of things that you can do and have setting up and enabling these farms and put your tokens to work while the network is building, and you can build up on the network effect. You can do the same thing on Ethereum, on Aave, or any of these different chains and stable coins. And a good example that I want to give you here is actually now that the TON wallet is available for use in the United States now you can actually earn 20% APY by staking the stable coin that we mentioned earlier today on the live stream, the Athena stablecoin, the USDE. So months ago, we were talking about how these stable coins are going to start coming up, and they're going to be opportunities to earn yield in a relatively stable way, but in a way that's just by you just doing it yourself, custodian on a wallet, as easy as it just being right on the Tom wallet. And so I wanted to show you just like how in this wallet is integrated directly right into the Telegram app. So it's just like you just open up the Telegram app and you have basically straight up decentralized finance where you can stake and earn yield and swap and also sell, and you can on-ramp and off-ramp by using MoonPay integrated into the Tom wallet. So if you didn't know that, so there's a partnership with MoonPay and also Telegram with the TON blockchain for being able to have MoonPay rails to get liquidity onto the TON ecosystem. So that's another way that you can earn yield with stable coins. And look, and remember, TON is a blockchain that has the native USDT and has been getting a lot of mints, and is looking like it could be one of those top blockchains that actually gets a lot of stablecoin minting and possibly, some big institutional adoption. So we're kind of keeping our eye on that. We're going to maybe, start building up that Tom wallet, staking some of that USDE, earning yield, and see what happens by doing that and building that up over time, and doing this in a micro way of playing the game in DeFi while also building up our legacy bag of, our memes and the things that we, that we really care about. And, we're kind of like, community driven and kind of working for our bags. We're also going to be doing that too. But I think there's a lot of opportunities to earn yield, test out these blockchains. I think a great place to start is Pulse Chain, and then also in checking out the Tom wallet and seeing where you can earn some yield with that USDE. We're going to test it, and we'll keep you updated on where and how much, where we go with it, how much we end up earning, and just kind of see what happens. But yeah, I think it's definitely something to pay attention to.
The MicroStrategy of Ethereum works similarly, but we're at the earliest stages because if this is the 2017 moment for Ethereum at 3,700, it could make a move to 30,000 or more. On top of that, Ethereum pays you.
Did you hear that? Did you hear it? See, this is the thing. I went on such a rant, but my whole point was that these companies are not here to make like trenchers, the trenches, the daily Solana runner. That's not like what. That's not. No. They're thinking like, yo, Ethereum is going to 30K and Solana is going to be like past $1,000 and Bitcoin is going to be crushing over 200,000. And they're in it for the long haul, the long game. So where are we at?
For providing network security by staking. That's a 3% yield. So BitMine owns over $3 billion worth of Ethereum. When we start staking and it's legally compliant, all within the US, that's more than $100 million of revenue. Of net income. So it's a profitable treasury company. And we've been able to grow our holdings of Ethereum from roughly $4 per share in 30 days ago to over $25 today. So it's adding about 80 cents to $1 worth of ETH every day.
Interesting. I mean, when I think about strategy, it is really it's the whale in the Bitcoin market just because they have been buying up so much Bitcoin. So if Bitmine is taking a similar approach to Ethereum, where do you see prices for Ether going?
Well, I looked at some research from Sean Farrell, who's our head of digital asset strategy, and he put out a presentation about Ethereum today. So he thinks the ratio of Ethereum to Bitcoin could go back to its 2021 highs, which is about 0.14. That would value Ethereum today at around 16,000, and it's currently 3,700.
Did you hear that? Okay. Now let's go to my ETH chart that I said no one wants you to see this ETH chart. No one wants you to see this. You see this ETH channel? You see these Fibonacci extensions hitting up here? Do you see this ETH moment that he's talking about from 2020 going up into right here? Okay. Now, do you understand how we can now go up from this particular bottom going up to that 16,000 and hitting basically from there a 1,000% move from the bottom of 1,500 from March of this year, and then we go from here now at where we're sitting going into 16,000. I mean, yeah, let's go, baby. And people were telling you on the timeline to be bearish Ethereum and that it was dead technology. It's like, guys, if you were in any vicinity of people that were telling you these things, you need to unfollow them immediately. You need to unfollow them immediately and unsubscribe to whatever you're subscribing to of these people if they were telling you to rotate out of ETH because it's dead technology and they were ETH bears. Unfollow them immediately because they're dangerous and irresponsible and they should be punished. No, but for real though. It's ridiculous. It's just crazy. That's a crazy price call, but I like it.
So he's just saying Bitcoin ratio versus ETH, let's get back to where it was 5 years ago, which makes sense because it's a better story today than it was in 2021. And that gets you, close to 16,000.
And what he's meaning by that ratio is the one right here. That ratio. That's the 2.618 ratio, 0.119. He's talking about that one. I'm even just hoping, we can make a lot of money. This is the thing. Like, you realize that, like, if we get here back up to that ratio, and we have been buying altcoins at any point right here, at any ratio right here, that means like we're going to see so much more gains if the ETH BTC ratio manages to get back up to the 2018, 2007 or 2017 bull market. People have been comparing this particular cycle and 2017 basically kind of this cycle being a repeat of how it went up like this. So you're talking like a freaking, overall damn 10, 15, 20x average on your portfolio going into the next 6 months, 6 months to a year, like life-changing gains. If we can really lock in to this, my friends. And I've been saying this for a while, and it's just like I'd like, and it feels good to have people like this like kind of confirming it for me.
To Bitcoin go back to its 2021 highs, which is about 0.14. That would value Ethereum today at around 16,000, and it's currently 3,700. So he's just saying Bitcoin ratio versus ETH, let's get back to where it was 5 years ago, which makes sense because it's a better story today than it was in 2021. And that gets you, close to 16,000.
Woo! Give it to me, Tom Lee. So, Chris, like, yeah, it's just, it's wild. Oh, how are you guys doing? You doing all right? Headband said I looked like a sweatshirt trench lord. This is the nighttime stream vibes. Well, let's see how the market's actually doing. Let's see how the bubbles are doing. The bubbles. Yeah, the today was actually looking pretty good, and now we're starting to see a little bit of volatility. Starting to see some volatility here. But the things that we're doing, like I said, the things that we're doing the best in terms of altcoins was Polygon, Litecoin, and Athena, and just the things that I was actually, funny enough, for mentioning that I felt like were undervalued and weren't getting very much attention. And specifically Headband. Headband always makes fun of me for being bullish, like on old coins or coins that were bullish in 2021. He's like, "Wake up, bro! You got a 2021 mindset, bro." And it's like, yeah, because guess what? It was only 4 years ago. What are you talking about? This is the thing. You can't have a brain of a goldfish and have that short-term mindset, because I'm hoping to be like fully retiring my bloodline through actual really compounding interest in this stuff. And then I don't want to get caught up in the trench with trying to catch the runner, or like, oh, maybe this one, if I put in $100 and then I'll get out quick enough to be up. No, I don't want to do that. I want to buy and hold stuff and see that thing turn into insane gains. And so the only way that you can do that is to buy, hold, and have patience. And that does not mean that you don't pay yourself or you have a kind of maybe a DCA out strategy. But some of these freaking 2021 coins, it's like the institutions are like, just like with what this, Tom Lee was explaining with Ethereum, is having its, its Bitcoin moment now. And it takes a little bit. So it just shows that, like, you're convinced to become a gambler and a trader because you're impatient and people don't want to wait. And that's what you need to be able to learn how to do. That's what I have to learn how to do. I've had to learn the hard way. I had a decent portfolio. Heck yeah. You can liquid stake however much freaking ETH you want, Mr. David Gelfand. That whole, like, you don't have to have 32 ETH to, you know, but that's just to be like a ETH like a ETH validator or something like that, you know. But if you just want to stake ETH, you could liquid stake ETH all day. You can liquid stake 0.01 ETH if you want to, and then have a representation of the Lido staked ETH if you want, or Rocket Pool ETH, or Coinbase CETH, whatever ETH you want. I mean, there's so many liquid ETH things that you can do. But this is the thing. This is the institutions are doing this. They're going to do it through the modality of the ETF, and then they will just, instead of buying ETH and then doing the whole staking process, they're just going to buy the ETF and then earn the dividend, which is through them staking and earning and generating the yield. And so this is, I think, how that is just one catalyst for how Ethereum can get past 10K, like 10K minimum, like 10K is bearish. Like, I think it could, like, in the next couple years, like, will be at like this, you know, what seems like an outlandish call for Ethereum being at 30K. But I mean, think about it, in the next 4 years going into where we could, you know, have our pullback and go into a bear market, however long this particular bear market's going to last is very much up in question of how it could be different from the other ones because of the nature of so much liquidity and institutional adoption and the different story. Like Tom Lee's talking, like the story is different now. You know, we were in new territory and smart contract territory and all kinds of stuff with DeFi and Web3 and all that. That was just like new ground. Now it's a different story. It's a race. It's a digital arms race that's happening right now. It's signaled by the White House releasing all these reports, by the SEC releasing all these reports. And retail's not even looking. They're not even looking. But that's my mission. Is like, you know, I can maybe potentially get retail to start looking. Well, you know, the more expensive that Bitcoin and Ethereum get, yes, it does become harder to acquire whole ones of ETH and BTC. But that's what's the beauty of being able to dollar cost average, is that, you know, you can, whether you got $5 or you got $100 or $1,000, like, you can figure out a strategy to start, you know, accumulating these things. And if the governments are doing it, and like I said, the smart money is they're ponying up and DCAing and creating these treasuries, these companies that are crypto focused, and it's just, yeah, that's where the money's flowing. And then you can think, you know, okay, so retail is just like not even paying attention. The trend of even searching for Bitcoin, Dogecoin, Pepe, or the term crypto, it's just like, it's in the tubes. You know, crypto's kind of like, people are starting to search like crypto, and they're starting to kind of like, it's kind of starting to trend up a little bit, but it hasn't spiked like it did like with the Trump pump. You know, this was another catalyst of euphoria was the Trump pump. And actually we were pulling up a graph that always showed that after a president is elected, it triggers a pump, because then it's just kind of like, okay, business as usual. And then afterwards, we get a correction that could, you just don't know how long it'll last. But look, we've had these spikes. You know, that was the you know, previously we had, you know, the different 2021. That's where retail started to pay attention because of Wall Street bets, because of, you know, the whole run on Wall Street, the Doge, you know, the Reddit communities. This was all happening in the beginning of the year. And then we had like Tesla announcing Bitcoin, you know, all these catalysts and stuff. That's kind of what, Retail came in and was a little bit more optimistic coming out of COVID because of the nature of what COVID. We got the stimulus checks. Some people were just trying to figure out, what the heck do I even do? Some people in those times started to think about investing or stocks or in anything like that in general, because beforehand, you maybe weren't even paying attention to it at all. But because we were at home and locked up and we had all that stuff happen, a lot of people downloaded the Robinhood app. You downloaded Webull. You started watching financial videos online and trying to figure out what the hell you were going to do. So this is why we had those sparks of interest and people searching about these particular things right here. You can see it. And so now, when are we going to have another spike like this? When is it coming? Will it ever come? Well, that, my friends, is what we're here to find out. That's what we're here to find out. We're going to find out why we haven't got to 10 likes yet. It's because the algorithm is they're shadow banning us a little bit. We really appreciate you guys coming in. All right. So, real quick, before we end the live stream, I asked Grok a question. We're going to break it down. I said, break down when you think AI will take over the jobs market and what percentage you think will be out of work due to advanced robotics. How does this also play into UBI, Universal Basic Income, and where cryptocurrency comes into play with all of this? It's a loaded question. It says, predicting the timeline and extent of AI and advanced robotics impact on job markets is complex. As it depends on technological breakthroughs, economic incentives, policy responses, societal adaptation, and below, I'll break down the potential timeline, the percentage of jobs at risk, the role of universal basic income as a response, and the relevance of cryptocurrency in this context. So first it says breaks down the timeline of AI and robotics and the impact upon the job market. And it says between 2025 and 2030 is the short-term early automation wave, which we're experiencing right now. What's happening is we're getting routine, repetitive tasks in sectors like administrative support, customer service, data entry, and retail are being automated. AI tools like chatbots and robotic process automation are already replacing tasks in call centers, bookkeeping, and basic content creation. Self-driving vehicles are beginning to impact driving jobs like robo-taxis in cities like San Francisco. So this could be completely eliminating any type of taxi work by a human and being replaced by autonomous driving cars. Fully. No more Uber driver. Timeline drivers. This is the World Economic Forum is estimating in 2020 that 85 million jobs could be displaced by 2025, with 97 million new jobs created, suggesting a net gain but significant disruption. So it just depends on how the pendulum will be swinging with the amount of jobs that are lost, with what our jobs are being created by this new disruptive technology. And McKinsey projects that by 2030, 30% of current U.S. jobs could be automated. 30%. With the 14% of global workers needing to change careers, which was the topic that we discussed in the beginning of the live stream. What are you going to do if you are in these sectors? Sectors most affected is administrative tasks, 60% automatable by 2035. Retail, 2035 is a really interesting date because we mentioned that date on, this was a date mentioned in iRobot, the Will Smith, robot movie, where it shows how the future looks in Chicago in 2035. And a lot of and it's actually a really good depiction of how I think those future might actually look, where we have robots walking the streets. They're people have assistant robots, and they have a family, household robot. There's delivery robots, and it's just kind of like, and then we got like, AI systems running, maybe just all the traffic, and just automation to the full extent of what you think it would be by 2035. Watch iRobot. 65% retail, 65% of jobs by 2025 in manufacturing due to advanced robotics. And the key insight, this wave focuses on rule-based, low-skill tasks, but generative AI is starting to encroach on white-collar roles like finance, legal services, so law degrees and people doing law. This is what's crazy, is that it actually is going to be disrupting some of the legal work, because you could just have an AI agent who's an expert at all aspects of the law by the code of law, and then get certain tasks done. And content production, this is going to be a real tricky one as well, because at a point there's going to be it will be hard to tell whether you are watching an AI video or watching a real person. And so there's going to be, I think, a need for true, genuine content and real people talking, for instance, what I'm doing right now. And there's going to be a whole, need for this, because people are going to, I think some people will be able to still, I think, tell. It's like, okay, this is not a real person. This is AI. There's no, you can just tell it's not real. That's what's happening right now, even with a lot of people testing out using AI content and generating AI content. And I don't think it's going over as well as you might think it is. I think people like, because the videos that actually perform the best, if you notice on YouTube, that hit the algorithm, is just like a young kid pulled up his phone and he's just talking in his phone about some, philosophy of life and whatever. And then some of those videos get millions and millions of views and hit the algorithm like crazy. And it's just a young kid talking about a particular situation, So I think there's something to that. So by 2030 between 2040 is going to be that midterm augmentation autonomy, where it starts to get really interesting, where AI will move beyond routine tasks to augment or replace roles requiring judgment, pattern recognition, and complex decision-making. Sectors like healthcare, 25% of medical administrative tasks automatable completely by 2035. Finance and marketing will see significant transformations, where basically we're going to see finance agents basically doing all the books, doing everything, all those tasks, being prompted to do so, and do it 1,000 times better than what a human would be able to do. That's probably going to be coming down the pipe. Not probably, it will. Autonomous vehicles and humanoid robots could disrupt transportation and manufacturing further. It already is right now in 2025. So it could actually accelerate a lot faster than what this even is predicting. The timeline drivers is that Goldman Sachs predicts up to 50% of jobs could be fully automated by 2045, with 300 million jobs globally lost or degraded by AI. And you got to think about all the bank tellers, cashiers, even people who are stocking shelves or working in the back of any type of retail store, shipping, packing, anything like that. That's a lot of jobs. That is a lot of jobs. There's a lot of sectors that are going to get hit really hard in the next 10 years, and it's going to be pretty freaking crazy. And I don't think we truly understand the implications of this. And this is where I think it's going, the cryptocurrency and the stable coins and all this stuff about the legislation about stable coins. I think this is why it's been such a topic in focus for the government, because they're also investing in AI. You got to remember, Trump announced a whole initiative for AI with NVIDIA at the helm, with Sam Altman with OpenAI, and somewhere with Elon being in the mix as well. And I can't remember the other, but basically like saying like, hey, like this is where we're headed. This is where we're headed. You guys need to get prepared. And by the way, these stable coins are going to get deposited into people's accounts as a stimulus UBI because so many jobs are going to be lost. And these people are going to not know what to do. Some people will figure it out. Some people won't. That's the reality. That's what's happened for generations and generations of people who weren't able to figure it out. They end up in some very tricky spots. And they have to pivot. And if they don't, it's just like society and things just keep moving. If you don't move with how things are changing, you will be caught and stuck in the past. You won't be able to react appropriately to what's happening here. So the key insight here, the marriage of AI with robotics and the self-driving cars, humanoid robots will accelerate disruption, with cost of robotic labor potentially dropping to 25 cents an hour, making automation economically compelling, which means companies won't have to pay a human people that are getting paid these full-time jobs with pensions and insurance and all this stuff, and all of a sudden these companies are going to be able to invest in a type of AI framework that could do all of that without having to pay all that, and then they can just kind of have a small skeleton crew of people to manage it, and they can profit and make the company bigger and scale. 100% they're going to do that. They are going to do that. 100% over. These companies will do this. And so it's really interesting. It's going to be really interesting to see what ends up surviving as the sectors of work and how people are going to earn an income. And it could be that the nature of different wage labor and how we even work as a society is going to be changing, because if waves of sectors of jobs are going to be gone and people are going to need money, they're going to need money to be able to feed themselves, to provide the basic needs that you got to have a shelter, you got to have food, you got to be able to take care of your family. How is this all going to be dealt with? Because this is a global thing. It's going to be really interesting to see what happens. Now we're getting into some really interesting territory going into 2040 and 2050. The long-term potential dominance. AI could automate or transform 50 to 60% of jobs by 2040 with full dominance. 80% plus of jobs possible by 2050 if innovation continues. 80% of jobs. This assumes breakthrough in AI's ability to replicate emotional intelligence and creativity, though roles like teaching, therapy, and high-level management may persist due to human-centric demands, like we were just talking about and using as an example of people wanting the human connection and wanting to, get back to the roots, back to the basics. Timeline drivers, the exponential growth of AI capabilities per Moore's law-like trends and declining costs of robotics will drive adoption. However, regulatory frameworks, public resistance, and ethical concerns could slow this timeline. That's when things start to get really interesting, because then now it comes into the whole ethical concerns and actually like laws and rules and regulations on how, robots are interfacing and AI is interfacing with the nature of our human existence. The key insight: the extent of automation depends on whether AI complements or replaces human labor. Historically, trends suggest new jobs will emerge, maybe 8 to 9% of 2030 labor demand in new occupations, but it's not going to be enough to combat the rapid displacement that could outpace the job creation without the intervention. And what's going to be the intervention? I think it's going to be the nature of the UBI, some type of universal basic income through the stable coins. So now it goes into the UBI. UBI is increasingly discussed as a response to AI-driven job displacement, aiming to provide a financial safety net. Here's how it plays into the scenario. So with 300 to 800 million jobs potentially being lost between 2030 and 2040, this mass unemployment could depress wages and consumer spending. That means that the whole economy would be very much disrupted by the nature of like people even acting in the economy at all. That means like consumer spending would just be like at the lowest it probably would ever be, because people just don't have the money to do it. People are not going to be going out to eat and going on vacations and going and buying those pairs of shoes, because it's like they don't have a freaking job. So threatening economic stability, the UBI could provide income to displaced workers, sustaining demand. If they print the freaking money, then how would they just not be able to do that anyway? And that's the whole point. That's the whole point of the scam. The whole scam of the wage labor, debt slavery, interest-based debt economy system that we're all set up in. This is what's going to be interesting, how this is all going to AI and all the things. This is all going to flip all this on its head. It's going to flip it on its head. Social equity, AI-driven productivity gains are likely to concentrate wealth among capital owners, exacerbating inequality. Even with the UBI could disrupt these gains as advocated by figures like Andrew Yang and Elon Musk. Andrew Yang being one of the first, talking about the universal basic income, but, he never could explain how and where it would come from. So if we're getting all these tariffs and America is booming from bringing all this cash in, and we're minting one-to-one stables, where do you think the UBI and where it's actually going to come from? Where do you think it's going to come from? It could potentially come from that. Thank you, JV. I just want to let you know that you could be absolutely right. And if you were here earlier, you missed my explanation. JV, thank you. Public service announcement. He was just want to let you know that when Feds cut rates and ETH is at all-time high, Pulse Chain will flip Solana in market cap. I could agree with you, sir. Earlier today we went into a whole thesis about Pulse Chain, and then earlier just on this live stream we went into how you can test out the farms and just do DeFi pretty easily on PulseX and earn the incentive token, and actually start to, because as the whole topic of discussion of this live stream is like, what can you do to compound and earn and figure out how to, be early in this stuff right now and to be compounding it for the next 6 months, year, 2 years, however long, and see what we can do. This is where you could do it. I don't even know what I was even talking about. No, you're fine. I'm glad someone came in that was just bullish pulse chain. So this is what no. That's so lame. Yeah, I did notice that though. Yeah, I did notice that. So, because I was earning this, these are the two. So these are the two that I was doing. I was doing incentive and PLS, and then I was doing incentive and PLSX. And was I doing this one too? I might have been doing this one. Or no. Was it? Yeah, I think it was, and maybe it was Hex, the Hex and PLS combo. And they were earning pretty decent yield. And actually, I was able to earn a pretty decent amount of incentive token just with like a very small amount of capital. So I'd just be so interested to see, by buying, you know, say like $1,000 of Pulse chain of PLS, $1,000 of incentive token, and $1,000 of PLSX, splitting them up all in half, $500 going into these particular pools. So like you'd say, okay, split 500 incentive, split 500 PLSX, and then put it in this pool, and then in this farm, and start to basically farm the incentive token for the next 6 months. And then by, like JV saying, like, hey, when ETH hits all-time high, this could just be kind of going out of control. And then also just these tokens themselves could just be potentially going out of control. I mean, we're willing to take the bet. And JV's also asking about the Gray's currency, the PTGC. So that is, we talked about that the other day, actually. That's one of the more popular meme coins that is on Pulse Chain, and the other one being Teddy Bear. So the two main meme coins, I think, that kind of had a lot of attention over the past couple years has been the Gray's currency, GGC, and Teddy Bear. Right here, we were ready. We were ready for any people who are bullish Pulse Chain. It'd be cool if we just got more people that were bullish Pulse Chain or in this ecosystem and come and be fans of the channel and just like, come and hang out and join the live streams, because we actually talk about this a lot, and it's because we genuinely actually think, and we've had for a while, that it's somewhere to pay attention while everyone is looking over here. And then you got this thing happening over here. And there's reasons why I've explained this before, because of my perception and thesis around Richard Hart and him as a founder and a person who's trying to educate people in crypto, compared to the other people that are in crypto that want you to feel bad for them, go boo-hoo, buy XRP and feel bad for us because, we were bullied by the SEC, blah, 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 all that crap. But then I'd start to think that, the people that are scrutinized the most and shit on the timeline are probably the ones that have committed less crimes and is the least scammiest person than the one that is trying to convince you that they're the good guy. That's what I think. That's why I don't like to get convinced by the timeline of things. I like to come to my own conclusions. And this is entertainment purposes only, not financial advice. Educational purposes only. Maybe in me having my own perceptual awakening can help you in your own awakening as well. But yeah, both of these coins and these coins that he was talking about, the TGC, this is the Gray's currency, it's actually paired in PLSX, which is very interesting. And then also we have PTGC is also paired in Hex. So it's interesting, like the Gray's currency is paired in a lot of different ways with the ecosystem. So the Gray's currency is paired in Hex, it's paired in PLSX, and it's paired in wrapped Pulse chain. So there's something really interesting happening kind of with this particular coin. And the liquidity is really, really hot on actually all pairs. And the market cap too. So the TGC is very interesting. You know, I don't own any TGC, but it could be something to follow. I have bought a little bit of teddy bear at points, but why do you think all of crypto gatekeeps the Pulse chain ecosystem? Because they're not willing to, like I said, think for themselves. They get convinced by all of these bad actors in the space. No, not this guy. No, but no, this is ridiculous. We'll get into this. We'll get into this later. But the bad actors in the space are just like the squeaky wheel trying to convince you something. And there's just this perception around Richard Hart that he's the scammer because of the ego and the attitude that he has. And I think some people and some founders are, I hate to say it, but I think they might be just jealous. Richard Hart didn't have to create Hex or do Pulse Chain or any of that. The dude retired a while ago. And I think people like that and people like Richard, even just like, you know, comparative to people that are like Trump, for instance. And I'm not trying to compare Trump to Richard Hart, but in terms of business and as a businessman and someone who's trying to leave a legacy, that is what I think potentially Richard Hart is trying to do with his tokens and the DeFi and the whole freedom movement of decentralization, and why there's an ethos of people who are in blockchain and kind of like programmers and the coders, just kind of that I think Richard Hart exemplifies that ethos perfectly, to be able to battle the system and use actual knowledge and the legal system to be able to win and free speech, which is very important. So why is he gatekept? That's why. Because he doesn't play by the traditional rules to be like, let me scam the public, basically. So that's why. I think genuinely that is why Richard Hart and Pulse Chain ecosystem is gatekept by, for instance, fucking coin market cap. Like, you look at this and you go to Pulse Chain, and this is such BS. This is such crap. They put it in the what number? 5,245th ranking for Pulse Chain. That is so not correct. If the ecosystem as a whole was measured by the market cap and the liquidity and the market cap of what is in Pulse Chain right now, it's at like 7 billion. It's like close to 7 billion. And it's saying that it's only a $667 million market cap. That's such BS. So truly, Pulse Chain, if it was ranked in here in coin market cap, it would freaking be in the top 30 of chains. So I'm going to put some money in there. That's just like it's just an obvious play for me, that the level of gatekeeping and the nonsense that people like to say, and I always give people a hard time if that people have said all this stuff about Pulse Chain or like, oh, Pulse Chain, okay, yeah, what a joke. And it's like, have you even used it? Have you even dived in or done even a simple thing as what I've done, testing out have you? And I guarantee you that no one who talks all this crap and thinks they have a better asymmetric upside potential, thing, they haven't even freaking went in to test the ecosystem at all. They haven't tested it. They haven't even tested running the software. Like I'm running it on my browser right now, but you can even run the software and just go not even going in through your browser and run it like through the command prompt. Have you tried that? No other project is doing that. But apparently, we've been following this, and Richard Hart is posting about how there is a mass market. I mean, the dude has a lot of money. I mean, he's a billionaire. The dude's a billionaire. So I'm sure he has put together a mass marketing technique to be able to get something physical in the hands of people to promote the ecosystem. Because no blockchain truly has really done good advertising like these big companies do. Like just for instance, let's just like go with like Coca-Cola, McDonald's, just any of the big, like legacy companies that do advertising. People have to see things enough times to get it in their heads. I think that is kind of what Richard Hart is kind of betting on, is like, okay, people will see stuff directly and kind of get this in their mind share before they learn about the other stuff, which could be interesting. So I don't know. But the way that I'm handling this market, if you kind of just go back through this live stream, and if you dare, I have a whole thesis on how to acquire these blue chips like the big guys are doing, like the Tom Lees and all that stuff. And then we have our thesis on memes and why it's going to be very imperative to focus on the strong Ethereum coins, some of them being the meme coins. And then also the nature of experimenting with generating some yield and incentive and pools and APY and stuff like that on Pulse Chain while it's in its growing phase. And it's like technically early stages. So that is how I am going to survive the AI takeover. That's how I'm going to survive it. And I hope you guys survive it as well. But thank you for tuning in for the impromptu live stream on how to survive in the age of AI. We'll see you on the next live stream. Good night. Hey everyone. I just wanted to show you a really quick metric that I found fascinating. So 41% of the people that have been watching this channel and actually liking the channel and the content have not subscribed. 41% of you, but I will say 58% of you subscribed. Amazing. You guys are doing awesome. But I want to say that the people that are not subscribed yet, please, won't you consider subscribing to the channel and joining the Dojo crew, where we are educating ourselves. We're in the markets every single day. We're live streaming Monday through Friday, and we're also posting content on a daily basis that is keeping up with these cryptocurrency markets. And this is where the money is flowing right now, guys. So if you want to get these updates and you want to be ahead of the game, I suggest you start subscribing and dinging the bell to be notified whenever I go live and post content, because you do not want to miss it.